Hello and good morning, ladies and gentlemen. You're with Markit Manufacturing, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. Starting with North American market, of course. Yesterday, quite an impressive movement. The Dow, 70 points up. NASDAQ, 300 points up. The Big C is 100 points. American manufacturers of goods such as electronics, chemicals, and heavy machinery saw their businesses contract in November at the sharpest pace since the end of the Great Recession, reflecting the damage caused by a strong dollar, cheap energy prices, and soft global economy. Markit Manufacturing PMI reports for November, 0.2% better than the expectations at 52.8. The ISM Manufacturing PMI for November, 1.7 weaker than the expectations, worst performance since 2009. And prices paid for November, 4.5 weaker than the expectations. Consumer spending month on month better than the expectations at 0.5%. For today, we have the ADP employment change for November and a lot of speeches. Ms. Yellen will have a speech. We'll look at retail sales from the Beige Book. And tomorrow we have the testimony, and Friday NFP employment rate for the dollar. In Canada, yesterday GDP annualized for the third quarter came weaker than the expectations by 0.1%. Month on month for September, also weaker than the expectations by 0.5. The Royal Bank of Canada manufacturing PMI better than the expectations and higher than previous. Today, we have the interest rate decisions and rate statement for the BOC. Friday, net change in unemployment for November and unemployment rate. For the European markets, the German DAX 30, 100 points down yesterday, 50 for the French CAC 40. German unemployment rate 6.3%, 6.4 was the expectations. 13,000 unemployment change. The unemployment rate in the European zone was better than the expectations and the forecasts. The Markit Manufacturing PMI better than previous, and the expectations in the EU, Germany, Italy, and slightly worse in France. Euro dollar 60 points up yesterday versus the pound 30. Versus the Canadian dollar 90 points up, and versus the yen 45. And versus the Pacific currencies, almost 100 points down yesterday. Today, European zone will print the inflation and a PPI reports. Thursday, interest rate decision and statement. Friday, gross domestic product for the European Union. For the Asian Pacific markets, 170 points up for the Nikkei yesterday. Monetary base year on year as previous and worse than forecast though. The Bank of Japan Deputy Governor, Mr. Iwata, said that the central bank is on track to achieve its target of 2% inflation, although he said it would act quickly if a Chinese economic slowdown undermines the price trend. Japanese growth will likely remain skewed to the downside for the time being because of slowing growth in emerging economies. The most significant risk at this moment is that of our further slowdown in the emerging economies, particularly China. This is what he said. As for the future monetary policy management, if the manifestation of such risk leads to a deterioration of the underlying trend in inflation, the bank will make adjustments without hesitation. Mr. Iwata added that the current Bank of Japan policy is aimed to lowering real interest rates by raising inflation expectations and pushing down nominal interest rates. Today, we have two reports mainly for Japan, the foreign investments in Japan stocks and foreign bond investments as well. For Thursday, we are waiting for some printouts from the China. This would be the PMI reports, and next week on Tuesday, imports and exports, and Wednesday, PPI and CPI data again for the Chinese economy. For the Pacific markets, Glenn Stevens' speech yesterday and GDP quarter on quarter, 0.9% better than the expected, and 0.8 and previous 0.3 year on year, 2.5 better than the expected. So basically round numbers there. Aussie dollar 90 pips up, 110 range versus the New Zealand, no big movement of course, versus the Swissie 80 pips up, 110 range versus the yen 90 up, 100 range versus the New Zealand dollar versus the US dollar, big range there, and versus the yen as well, almost 100 pips there. Mr. Stevens refused to discuss the interest rate decision, as the reasoning behind was given with the report yesterday, but wanted to reflect on the nature of the adjustments going on the economy. In few years' time, the current contraction in capital spending will probably have reached an end. New opportunities for growth will have emerged, resulting from things like growth in the middle class of Asia, boosting demand for services as well as for energy and agricultural production. The growth of India is surely also potential opportunity for Australia as well. Australia's economy expanded at a quicker pace than economists forecasted in the third quarter, driven by the fastest gain in exports since the year 2000 and supporting the central bank's decision on Tuesday to keep interest rates steady. The GDP data was mainly a story of a recovery in export volumes that had been constructed by storms and shut ports in the second quarter. Reserve Bank of Australia's governor, Mr. Glenn Stevens, described the growth figures as not a bad outcome, as they were slightly above what the RBA had expected. The nation's terms of trade or export prices relative to import prices dropped 2.4% from the second quarter and 10.5% from a year earlier, reflecting the continued decline in commodity prices. Australia is making a transition from the largest resources investment boom in its history to broader-based growth, and this is quite challenging. For Thursday, we have the imports, exports, and trade balance reports for the Aussie, new home sales as well. For Friday, we have the retail sales reports, which would pretty much conclude the main news in the economic calendar for the Pacific. On the commodities side, the S&P 500 index had a range of 17 points, currently over the 2,100 mark. Gold had a range of $11. Silver had a range of 19 cents. The WTI had $1 range at 41.50.60 currently. Natural gas is trading at 2.20 at the moment, range of 6 cents. U.S. natural gas prices edged lower on Tuesday as weather forecast for early December pointed to mild temperatures, dampening near-term heating demand expectations. Tomorrow we will have the natural gas storage change. Another fundamental news here is Japan's biggest oil refineries consider merger as demand drops. Japan's two biggest oil refiners, JX Holdings and Tonnen General, said that they are talks to merge after Nikkei newspaper reported the two companies reach a broad agreement on the deal. They consider to merge in order to strengthen the competitiveness of their petroleum business. Crude oil stock change is what we have in the agenda for today from the economic calendar. That was pretty much all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye from me.